preciousmetallsinvesting.com. My name is Ted Sudol, and I have the pleasure of having as my guest today Paul Majanovic. Paul is the author of Stock Investing for Dummies and also High Level Investing for Dummies.
Exactly.
Welcome, Paul.
Hey, good to be back on your program, Ted. I mean, I've been watching your site grow. It's been a lot more people, a lot more notable folks, and there's excitement in the air. Maybe it's probably fear, considering how the markets have been, And I think, what we want to mention is, look, how many months and months, not only we, or you on your site and me on various other venues, and a lot of other folks that we respect, we're mentioning how the stock market, bull market in recent years has been partly due to artificial stimulus, from venues such as the Federal Reserve. And sometimes when you talk like that, some people might be skeptical. So really quite interesting that, some time ago, one of the Fed governors, maybe an ex-Fed governor, I don't know, mentioning how the Federal Reserve had front-loaded, with their, financial wherewithal, the bull market, which means to a great extent they were artificially stimulating it because they were hoping for a wealth effect, so that could basically, for lack of better ways of putting it, have a either direct or indirect stimulus to the economy.
Right.
And as far as I'm concerned, whenever you have the Federal Reserve putting this artificial stimulus where they're pumping money in, and then people say, how is it done? Well, through their member banks, they do a lot of trading, both directly and indirectly with stock futures, etc. And the point is that when you start having money flooding in, as stocks, for the most part, is a finite supply of it. So when you have an increasing amount of money going into a finite supply of stock, basically you'll have asset inflation, really the best way of putting it. Because many people think of inflation in terms of like goods and services, like when you go down to the store and the thing is more expensive than it was a year ago. But in recent years, when we hear about inflation, many people think it's goods and services, and they haven't seen any of it, so they think there's no inflation. It's because the money was not flowing into goods and services, because there's been weak demand because of a struggling economy. But the money has been going to asset inflation. And the fact that you had this gentleman, basically in a public venue, I mean, people can find it out there, admitting that the Federal Reserve was doing this. Well, that's vindication for a lot of folks who were suspecting it because they were watching the behavior of the markets and all the machinations of the Federal Reserve.
Right, you're exactly right. And I think that a lot of the things that you predicted in September are happening.
Yeah, well, so far so good. You and I have spoken in the past, and I even had an interview or two elsewhere, and even the occasional YouTube video where I've produced it myself. And I said, look, we're heading into a bear market for the financial markets. A lot of the bubbles are now starting to fall apart at the seams. The economy looks definitely recessionary. And now, some people mentioned about how do you know it's a recession? Well, we'll probably cover that topic in another video. But for now, it's good to know that the things we're talking about, and we don't say this with glee or whatever. The thing is that people need to know what's going on so they can make the proper moves to prepare, or for some speculators out there, make money with this, but at the very least, protecting what you have.
Exactly. We don't say this with glee, but wipe that smile off your face. Yes, we would wish that things were otherwise, but listeners here at preciousmetallsinvesting.com who have invested in precious metals will be vindicated.
This is true. Anyway.
Okay, well, thank you, Paul, for being with us today at preciousmetallsinvesting.com.
Yes, I'll try not to smile too much.
Thank you.